welcome folks to our AJA Lunchtime Live. I'm Kimberly Carroll and I am the AJA Director. Our topic today is Vegan Investing 101. Welcome to all you brilliant beings who are here with us live, and welcome to those of you who are watching the replay. We appreciate you joining us and we appreciate your time. So today we're featuring AJA and vegan financial advisor Justin Manning, and he's brought along some of his fabulous colleagues, and together they're going to give us a rundown of the choices out there for investing in a way that doesn't hurt animals and the planet. And they're also going to give us some guidance in creating financial wellness so that we animal advocates can put more of our energy and attention into working for the animals instead of worrying about our retirement, or if we're ever going to have retirement. It's sometimes as animal advocates, we feel like we can't pay attention to our own well-being. And as a coach for change makers, I try to tell you all the time that your well-being is the foundation on which to build all of your activism, all of the impact that you can bring into the world. And financial wellness is definitely a part of that. So I think we're all on spotlight now. So let me give you just a little bit of background on all of these beautiful folks here. First of all, Justin Manning, a lot of you know him. He is a very active AJer. We're so happy to have him in our community. After more than a decade as a group personal fitness trainer, Justin totally switched gears to become a vegan financial advisor and is on a mission to help impact-driven people and companies. Folks, he's also a father to, I think she'd maybe be an 8-month-old now, Justin, is that right? About 8-month-old daughter. And so maybe forgive him if he has baby brain. Is that what you're trying to tell us, Justin? Welcome, Justin. So good to have you here.
Thank you. Happy to be here.
Okay, let me introduce your wonderful colleagues. Brenda Morris is from Humane Investing, and she is a registered investment advisor in Virginia, I believe. Is that right, Brenda? Yeah, Brenda is in Virginia, and she specializes in social, responsible, sustainable, and transformative investing. Welcome, Brenda.
Thank you.
Excellent. Yeah, Sloane Ortel is, her business is Invest Vegan, an ethics first, she is an ethics first asset manager based in Brooklyn, New York. Sloane, so good to have you here.
This is a party. I'm so excited to talk to you guys.
Yay. Yeah. Sloane just brings the party. I love your energy. And Tom Nowak is from Quantum Financial Planning in Washington State. Tom's written 2 books and specializes in low-fee vegan investing. I'm very curious about this. Tom, welcome.
Thank you. Glad to be here.
Oh, good. And folks, Kirsten is right on the ball and is putting the links for everybody in the chat. We'll also put that in our Facebook group later on. Okay, so folks, I really, want to jump into this. This is a topic that I've gotten a lot of requests for in some form or another. So and I'm personally really excited about it too, because this is an area that I've been starting to research, and there's so much, and I would just love some guidance. So a lot of folks, we'll start with you, Justin. A lot of folks that are here today are really careful about not purchasing meat and dairy and eggs and leather and products that don't have a cruelty-free label. However, I'm going to guess that many folks have their money in investments that are actually funding animal exploitative companies. So Justin, why is this an area many vegans don't extend their vigilance to?
Well, first, let me start with a land acknowledgement. I just want to honor, acknowledge, and respect that many of us are located on the traditional, unceded, and ancestral territories of many Indigenous peoples of Canada. And as well, too, I'll also say as a disclaimer, speaking for myself, everything that we talk about today is really just like a community fireside chat. It's not to be intended as direct financial advice. It's really for education and entertainment purposes only. So I just wanted to say that. And by trade as well, I don't know everything. So I try my best to insulate and surround myself with those who are best in their field, like these registered investment advisors here. By trade in Canada, I'm a registered insurance advisor. And so I do have connections to folks who can maybe better help answer some certain questions. But Kimberly, to your question.
Yeah. And I love the caveat. We always have to do that with animal justice. This is not legal advice.
Yeah, absolutely. So now that that's out of the way, in answer to your question, it's said that people are more comfortable talking about their sex lives than they are their finances.
Wow.
So I think the answer to the question is sort of stigma, not knowing what people don't know. And so the reason that people don't really gravitate towards this is because it's a scary topic for a lot of people, and they don't have people around them maybe that are unbiased, that they can trust and ask open questions to and have that dialogue. So that's exactly why we're here. And this conversation today is not going to answer everybody's questions. It's meant to be a kickstart and maybe continue this in future.
Well, and like I said, so many of the folks here are dedicated animal advocates, but I think there is like a gap that we have. Like we are, like I said, we're just completely vigilant, and like, I'm not paying for this if there's like a little bit of dairy in it. Yet maybe there's thousands of dollars going into a stock that is funding animal agriculture. Tom, is this, do you think this is because people are just so confused, or do you just don't think that they connect the dots on this?
Well, yeah, I think it's hard to connect all the dots because all of us are experts in something or a number of things. And it's very hard for folks to feel comfortable in their investing unless they're hobbyists by nature or really have a lot of bandwidth to absorb that. So then it becomes finding, trusted sources of information, channels and things like this, that they can say, yes, this is valid, this is not so much valid. But again, it's also very personalized too. There's a big article, cover thing on an Economist, environmental social governance, ESG investing, maybe not so good. That's, as I know Brenda very well, that just is a bunch of baloney. It's very good stuff. It's letting perfect be the enemy of the good. So a lot of times in investing, we have to not let perfect be the enemy of the good and move the ball forward the best we can. But it's just getting information from trusted sources is, I think, the key.
Yeah, and so as activists and animal advocates, I mean, we already have our plates so full, and what you're saying is like, I mean, figuring this stuff out is kind of a full-time job, or at least a full-time hobby, and so it's really tough for us to find the bandwidth for this, and so. But it's an incredibly important thing that as vegans, this seems like investing properly could be an incredibly powerful form of activism. Would you say, Brenda?
I would, and I love you, Tom. I actually had written down, please bring up don't let perfect be the enemy of good, because I've spoken to so many people who, just like you said, Kimberly, they get intimidated by it, so they don't do anything. And it hurts your own portfolio. So I'm a fiduciary. When I talk to so many awesome vegans and animal activists, they will say, I'm not worried about my portfolio as much. I want to do good for animals. And I say, that's wonderful. I love you for that. But I'm a fiduciary, so I have to look out for your best interest. And your best interest is investing now. Like, don't put it off. So I've had people that don't want to accept their match at work because of what they're investing in. And I say, you're just biting your nose to spite your face. I think that's the expression where I said, make sure you take that free money and then you can do more. So I see it a little bit differently, like the divesting movement. Can I use a quick analogy about McDonald's?
Yes, absolutely.
Like, I hate McDonald's. And years ago, I was at an animal rights conference, and I used to table there for humane investing, and everyone was like, evil capitalists. Nobody wanted to talk to me. And then like our group got older and older, and they're like, oh, we do need to invest. Like, this is something that is important to me, and that I have to participate in the system, whether it's perfect or not. So I mentioned, I'll stop hating McDonald's when they at least offer a vegan burger. That's it. Like, it's one ask, and I'll stop hating them so much. And I remember the group of people I was with, I was very naive, all said, I would never buy a burger at McDonald's. I don't care if it's vegan. And I said, but they're trying, if they at least do that. And I got shot down. So I view that same approach with investing, where I'm the one who, I don't mind dabbling with the companies that are trying, where there's other clients I work with that don't want anything to do with the in-betweens. And I like the advocacy part of it, because no offense to all us vegans, there's not enough of us. If we all just say we're not going to invest in Pfizer could care less. So that's why I like having my foot in with some of the companies that we do put pressure on them. And I feel like that's very powerful.
Well, and so let's, this brings up another reason that vegan investing, though, particularly can be so powerful. And that is really helping to propel vegan targeted or the sort of vegan themed companies. Does anybody want to talk about the power of that and being able to have more investment money going towards that?
Yeah, absolutely. I mean, I guess, backing up a second, I'll just underscore that capitalism is a system with rules. And there are votes and powers that are afforded to shareholders that are traditionally ignored by activists and social justice groups, right? As vegans, part of what we can do, thinking about a long-term perspective towards our advocacy, right? Because this isn't going to get done in 10 years, 20 years. It's a 50-year problem where we need to build soft infrastructure among ourselves to be able to push on this stuff. You would not believe how much more quickly you can get through to an executive if you own shares in their company. I run a teeny asset manager in Brooklyn. I have had direct contact with CEOs, CFOs, on pretty detailed matters over the course of, we've only been in business for 3 months. You can stand up an asset manager and all of a sudden have, be legitimated within capitalism in a way that you can't as a pure activist. And I think that that is one of the most powerful things that we as, a force have, going for us that we've ignored, right? If you look at right-wing movements here in the US, you can find 50, 60-year histories where people are investing in stuff, fomenting certain types of networking among people and whatnot. We have done none of that on the progressive left. So I think that as we think about, what we can do, how we can pressure, how we can engage folks, it's important to just realize that this is a really powerful way for us to have dialogue with the broader world. And if we are good at explaining why we invest the way we invest, what our ethics are, and how they motivate us to action, it's the kind of thing that CEOs respond to. Because if you say, I'm not buying your stock, and oh, by the way, I'm a significant actor in this market, unless you change this, they will change it. And if you say, I will name and shame you unless you do this thing, you will see things happen. I mean, there's a company that had some employee issues that I was invested in, and I sent them a nasty gram. And then, shortly thereafter, they kind of, came out and released a whole bunch of progressive policies targeted at their employees. Did they acknowledge my email? No. Did they tell me wow, Sloane, great feedback, thank you so much? No. But guaranteed, it coming in through the investor relations team, goes straight to the CEO in a way that it doesn't coming from a social media community manager or something like that.
Yeah. Okay. So big plus for just investing, for vegans investing and animal advocates investing in general. So I mean, I didn't even really consider that part. But let's also talk about specifically investing in vegan, like I said, vegan companies, eventually vegan stocks. What is Tom, I'm seeing you nod your head. What's the advantage of that as a movement?
Yes, it's a huge advantage, is because progress needs capital. I was a scientist in my first career, and I know that in 10 or 15 years, you're going to be sorry you're investing in meat, traditional meat. You're going to be sorry if you invested in dairy. You're going to be sorry if you invested in any traditional sea activity for fishing, oil. Those are all going to be stranded assets. There's going to be a process where capital is going to move. As investors, we can make that process happen faster. Just like climate change, we can make it happen faster by our choices and how much passion we have towards doing those choices. So you can do pure play vegan investing, but you have to be, like Brenda and Justin mentioned with the disclaimer, we're fiduciaries. We have to be very careful to act in your best interest to make sure you know what you want and you know what you're doing. We don't want to give you, a can of gasoline and some matches and tell you good luck with that. We want you to do the right thing. So, I wrote my book in 2014 because there was no way to do vegan investing, there was no mutual fund, there was no ETFs. Now there are ETFs. You know, there's VEGN and there's EB, more of a pure play type approach. But in the wrong hands, it could be like gasoline and some matches, and you can go to town and hurt yourself. On the other hand, if you know what those are, you can be a very good advocate of moving the ball forward, you know, towards those things. I think with your voices to the financial community, you can make even more change happen faster, more options happen faster, more existing. I mean, Brenda's I can tell you, you know, that she goes to conferences and browbeats, you know, some of the traditional SRI folks to saying, why aren't you filtering animal cruelty? And they say, Brenda, we don't want to talk to you. Well, once more, you know, they get tired of hearing just one voice, but now there's many voices. Brenda's kind of like the pioneer that started browbeating them first, you know, so I really admire her for that. And that's what you have to do, is you have to advocate for the change you want, because you're the boss of your own money. Don't let somebody else take control of your own money, because that's your decisions.
And I'll jump in on that too,
Yes,
Kimberly.
please.
Investing directly, you know, we'll talk about other things, I'm sure, that'll dovetail into this, but to Tom's point, you know, there was a 100% vegan plant-based company that was the second company to go public after Beyond. I'm sure people can figure out what that is. And I remember being on one of the Facebook groups, which can be dangerous, because somebody was essentially saying, you know, the stock was, you know, I think $6, and then it kind of went down to $5, and somebody was like, oh, like, it's on sale, make sure you grab it. It's never going to go below $4, and here we are now at 28 cents. So you know, I'm sure people have heard of the term diversification or diversify. You know, we don't like the term all eggs in one basket here. We prefer all apples in one basket.
Nice.
And so, yeah, you know, it's very little. Is it either or? It's very much so an and conversation. And so I just want to make that point clear, that there are a lot of people who got really excited and really did get burned, and that mindset can last for years and years and years. And so don't believe everything you read online is my point.
And just to, I think, really know the risk factors. I mean, when you're going one stock, that's huge risk. And if you're investing in one company directly, even huger risk. So, and I want to sort of have you folks explain a little bit more about the levels of risk. But first of all, because this is a vegan investing 101, there's already been some terms thrown around that I'm sure some folks need a little bit of explanation on. So ETF, ESG, can we start with that? Who wants to field that?
Yeah, ETF, exchange traded fund, similar to the term mutual fund, in that both of them are essentially a basket of different investments. So that's the difference sort of between what an ETF is. And a lot of people get confused with, you know, an electronic funds transfer, right? Like the money just EFT, that's not the same thing. So an ETF is exchange traded funds. And generally speaking, those are going to come with a lower management fee than a traditional mutual fund, which most folks find themselves in. So I'll take the ETF, and then someone else can take the ESG.
Who wants to field ESG?
Sure, I'll take ESG. So I've been, you know, kind of working in, you know, broadly defined ESG roughly, you know, since 2011 or 2010. Stands for environmental, social, and governance-based investing. And I think, like, one of the things that's a really interesting, you know, kind of bugbear that you see come up a lot is people will write these, like, you know, exposés about ESG investing. And they'll be like, well, look, ESG investing doesn't actually bring about necessarily investing in companies that are doing good. It's meant to move you away from risks that, like, you know, abrupt climate change or fossil fuel transition or something like that, you know, will happen quickly. And, you know, it basically is a risk mitigation tool. One of the best examples of how this works out in practice is the example of Nestle. You know, where, you know, I think pretty much everyone on this like chat is like grumble. Nestle is rated very, very highly by most ESG folks. And that's, partly because that's what happens when you sort of ask Wall Street to adjudicate your ethics for you, which is sort of what the traditional ESG products do. And that's why it's so important that Brenda is out there haranguing these folks to actually adopt an inclusive approach to ethical investing, because people are actually making investment decisions based on these determinations that they're making. So ESG, you can think of it as a high level screen that will likely take out a lot of the oil sands and stuff like that in your portfolio, but implementation varies a lot. And one of the things that's important to be careful about with ESG is that it is, to some degree, active investment management, where you're picking stocks that deviate from a benchmark. So you just have to be mindful that if you are investing in ESG and socially involved, vegan stuff rarely is the exact same as the non-vegan stuff, right? It's just the same, with investing. So hopefully I didn't ramble too much there and give way too much detail.
No, it's great. And I mean, the best thing would probably be if that ESG decided to be ESGV, but that's probably not going to happen anytime soon. Am I right?
I wouldn't say anytime soon. ESG, I think we all kind of view it as ESG 2.0, which is a vegan spin on ESG, because I think if we all took 15-20 minutes and looked into what ESG, how it's designed and how it's positioned, all of us on this call would say, geez, that sounds a lot like vegan investing, right? Focusing on the environment, focusing on people, focusing on making sure that there's not bribery going on in the governmental system and all those different things. So it's not going to Sloane's point, Kimberly, it's not going to happen tomorrow. It's not probably going to happen in 2023, but the more conversations like we are having today, you will be surprised at the speed at which we move towards that goal. A heck of a lot quicker than if we don't open ourselves up to having potentially uncomfortable conversations.
Right. I would say what all of you on the call could do is that are investing, talk to your advisors and say you want to screen out for animal cruelty. You want to be proactive to the risk that you can afford on vegan investing. That allows them, when they go to conferences, like the advisors here go to, we chat this up in the community. There was a first live since COVID, ESG conference a few weeks ago in New Mexico, and it's that buzz that you give at the tabling and in the hallways, and you up the ante on animal cruelty as a filter, and who's attending. You had Elizabeth Alfano from EV attending there, and she's chatting up the same people I am. And we're putting it on the agenda. And to show you that it works, when I first started in the ESG focus, in like 2011, nobody was filtering out fossil fuels, maybe one company. Now there's trillions of dollars divested from fossil fuels, to the point to where The Economist is attacking ESGB, because this isn't going to end well. If the smart people don't invest and don't lose their shirts, the people that lose their shirts are going to be very unhappy holding all these stranded assets. The same thing's going to happen with meat, dairy, and fish and things like that. So the thing is, you can all make that happen by talking about it. The same thing with climate change. One of the big advocates for doing things about climate is talking about it. It sounds like you just talk, but it isn't. It's because you're holding the keys when you're talking to your advisor, because they're worried about losing you as a client. So talk about it, and then they're going to learn about it. Otherwise, they're just going to follow, the path of least resistance.
Yeah, as animal advocates, I mean, that's something we always have to be aware of, is where do we hold power and to wield that, it really is, it's an important piece. We think as animal advocates that we're pretty powerless, but we aren't, because we are citizens in this society and we do hold power in certain dynamics in our life. So Joan said in the chat, my financial advisor tells me I've tied his hands re profitable investing because of restrictions I've set around no animal exploitation. I'm looking forward to progressive investment ideas rather than feeling shamed for my principles. So folks, there is this sort of idea that it's really hard for folks who want to invest their money ethically to actually make money from it. For example, the S&P 500, which is, I believe, 500 largest companies being traded in the US, 32% of their business is animal exploitation. So what do you say to those that say you're not going to be able to make money if you have that filter in? Who wants to feel that?
Talk to somebody else.
I mean,
Talk to somebody else.
I just show them my track record. Because like I mean, this gets to the things about implementation that we've talked about, right? Like, the broad statement that I want to invest well, right, can lead to a lot of different practical applications. And for me in my practice, like our ethics also lead us to exclude tech companies that are like monetizing user data. I mean, even vegan companies, a lot of the time you'll find folks that are really stressing like diet culture and stuff like that. Those strict ethical restrictions have saved us so much money this year because we don't own Meta, we don't own Google, we don't own Facebook, like we don't own any of these large tech companies that have been blowing out and screwing themselves up. That's huge, and I think that, so on the one hand, you have this window where like, something is wrong, you adjust your investments to account for that, and then all of a sudden the market bears that out. That's kind of what you hope happens. It doesn't always happen exactly that way. Sometimes you can, Google can go up for a long time before it blows out. But, the thing that I think is most important, right? I build portfolios, but picking stocks is not the key determinant of long-term financial success. Ethical investment portfolios are easier to hold for people because when the market is down, they have an easier time sticking with their plan. They don't freak out in the same way. And they have an easier time finding the discipline to just send in a check when they're scared. I think that, whatever a financial advisor can build that they think is going to beat the market or whatever, great, good for them. But I think that the most important thing is for us to be able to, think long-term here and say, like, what relationship do I want with my investment capital over the next 10, 15, 20 years? Because that's where it matters.
Yeah, so it's a long game. Kaylee just wrote in the chat, I've invested in several vegan stocks, which have all tanked. Right now, I'm concerned that vegan investing just isn't profitable. Do you see the trend reversing in the next 5 to 10 years? I'm gonna, like Kaylee, did you do that on your own? Did you do that through an advisor? I'm curious to know how you went about that. I invested on my own. So Brenda, can you speak to that and to Kaylee's comment?
Yeah, that's precisely why people might call me a sellout, because I would tell people don't just invest in vegan companies. And I've been doing this for so long, and I hate to sound like my bar is so low, but one of the things that I feel like where the movement has made huge strides is with a group called, I don't know if you're going to mention this later, FAIR, Farm Animal Investment Risk and Return. And I joke, but I mean this sincerely, they do what I've been doing, but with huge amounts of money. So what they've encouraged all these money managers around the world, somewhere upwards of 20 or 30 trillion with a T, is to at least acknowledge factory farming in their investments. And I love it because I'm a passionate ethical vegan, and anyone who knows me has to hear me, but they don't come from that angle. They tell people you're taking a risk. Like Tom was saying, you're putting your portfolio at risk if you're investing in companies that are profiting from animal agriculture. So I love that these huge traditional firms are getting behind this. And you could argue it's for the quote unquote wrong reason, but the animals don't care. The animals don't care why they're not being killed. They want to, at the end of the day, for factory farming to stop. So I don't know that I'm the best to say that, because I tell people don't just invest in vegan companies, like make sure that you're diversified, your heart's in the right place. But again, as a fiduciary, I want to make sure that you're getting exposure to everything. And it's funny when Sloane mentioned Nestle's, because I was super excited when they came out with the vegan burger. Like I got a marketing email from them. And I had one client out of everybody who was like, I hate them no matter what. And I was like, but no, they're at least trying. But again, I have such a low bar that any step in that direction gets me super jazzed, because also, like Sloane said, I've been on a call where it was just the only two people that asked questions at a shareholder meeting were me and PETA on the line with Maple Leaf. You know, Maple Leaf is like probably one of the biggest pork producers in Canada. You guys know more about than I do, but they own 2 vegan companies. And I don't know if they still do, but I know they acquired them a while ago. But it is like moving those, that's what gets me excited, is seeing the big players start to pivot. So I'm not poo-pooing strictly looking at vegan stock. Well, maybe I am, but it just makes me nervous. It really does. And I wouldn't do it with my own money, just target vegan companies.
And so thank you, Brenda. For those that are just like, no, can't do it. I'm only gonna, like Rebecca says here, I only invest in vegan and ethical companies, always looking to add more to my portfolio. And she's asking for recommendations. So can you give, for those of you, for those out there that are like, no, I just can't do it. I see all the reasons, but I just can't. I got to go strictly vegan and ethical. Some advice for them to get started.
And just the opposite of what I just said, I was on a call with Morningstar this week, and they're coming up with a direct index product. And direct indexing is the future. Like all the firms, I think Fidelity, Vanguard, they're all coming up with a direct index. And I'm going to put it in my newsletter this month, my Zoom screenshot of when he showed me that one of the screens was animal testing. So Morningstar, which is huge, is starting a direct index, and you can say, I don't want any companies that test on animals. So it's a pilot program. Don't go all to Morningstar and try to do this yet, but they're going to be launching it soon. And so, yes, if you don't want X, Y, and Z, you can say, I don't want X, Y, and Z, and you'll have a customized portfolio, which historically, you need to have a lot of money in order to do this, but they're starting with, I think it's 75,000.
Excellent. Harpreet is asking, what is direct index? Tom, can you handle that?
Yes. Yeah. In 2012, my first book, Low Fee, Socially Responsible Investing, was exactly that. Direct investing wasn't a thing. Separately managed accounts were. So it's almost the same thing, but to do without an advisor or with an advisor. So I talked about, well, let's just take, for instance, you can go to crueltyinvesting.org. A person went there and made an effort to take all the S&P 500 stocks and say, here's the ones that aren't cruelty free. Now, there might be the Googles and Facebooks, things that you don't like for other reasons, but there's going to be maybe 300 out of 500 stocks that you're going to already filter for cruelty free. You can take those stocks, circle the ones that you like, give them to your investment advisor and say, can you make me a diversified portfolio, a personal index? Or can you go to the new Schwab tool when it comes out, or some of these others, Morningstar indexes and stuff like that? Can you do this with me, for me? Because I can take this far. But most of us know what we want. When we go to a restaurant, we have to make those tough choices and tell the waitress or waiter what we want. We can't just sit there forever. So the same thing with investing is go to a site that's already filtered out for cruelty free, these large cap stocks, and start the conversation and say, these are the things, can you build a portfolio around that? And to me, that's what I would recommend, because I saw that trend coming. And there were others. I just happened to be lucky enough to write a self-published, very small, naive little book about the topic. Now it's very trendy, but it's trendy with the big players, with larger portfolios. And vegan investing can be the same way. Tell your advisor, say, these are my goals. This is what I want. There are people out there for the right price, and that's where Brenda and Sloane, we all have this, and Justin possibly too. We have the same issue. What you want, if you want the easy button and you only want to pay a couple hours of time or this amount of money, you can't get there from here. But if you want more of a customized approach, anything could be done, for the right time. It's just finding out the right person that's efficient enough for you that says, you know what, this is going to cost you $1,000 or $2,000 or $5,000 to invest the way that you want. You have to set the parameters for what works for you, because every situation is so different. But there are the tools out there now, because of pioneers out there doing this work, that there are the tools out there. It's not rocket science anymore. It was.
So Tom, let's just, because what you said is very important. It's very practical. So if somebody is wanting to have a very specific portfolio that is vegan and ethical based, which is also, what's the difference between portfolio and your personal index?
Is the personal index is a portfolio that's filtered by your worldview.
Got it.
So it's very, you're doing all the tools available to make sure it's your worldview. So it's not just Merrill Lynch's a portfolio for a risky investor. It's something that's just very personalized to you.
Excellent. Okay, so if somebody is very set on doing that, the easiest thing, if they have the money, would be to spend the money on some hours with their with their investment advisor, and to get them to hand pick not only the cruelty-free and vegan ones, but the best ones for them, and for their level of risk and their longevity and all that sort of thing. And then you're saying that with those that don't necessarily have a ton of money to spend on that, but maybe just want to sort of start dipping their toe in, there are some tools that are being developed, but is there, and you mentioned a website where they can go, and can you repeat that again?
I think it's cruelty-free-investing.org. I'm sorry.
Yeah.
Yeah.
And it's down right now for me. So it might be down for anybody else who tries to
I
check
think
it.
it's cruelty-free-investing.org.
Okay, great. So Kirsten will put that in there.
It's not an investment advisor or anything like that. It's a person that just was a passionate vegan, probably just took it upon himself to pay a lot of researchers to do this. And again, no work is ever perfect, and don't let perfect be the enemy of the good. But to me, I think that was a very good effort. It got the ball going, and a lot of times actions we do shame others into doing even better actions. People like following an idea or a good idea. So, and I think to Brenda's point, there are going to be products out there, robo-advisor tools that you'll be able to get your personal index and filter by animal cruelty. It's going to happen. It's going to happen.
Right, but yes, the less you use an expert, the more research you have to do. If you don't put the money in, you have to put the time in.
But the problem is, if you run at the first shiny bell, first person that says they've got this automatic vegan tool, sign up, and you don't read the fine print and don't understand the fine print, it's not going to end well. It's just not going to end well, because there's going to be some snake oil person out there that will find another group to profit from, and I wouldn't want it to be this group.
So Michael's saying the site's up for him, so that's great. Yeah, so the site's back up. Justin, there's people that are asking US versus Canada. Now, can you tell us, when we're in Canada, what is off bounds for us? Because there are some vegan stocks out there now with Beyond Animals. What do we have access to as Canadians? And we have a lot of Canadians here today.
Yeah, one of the best analogies is like a vehicle and fuel. So let's talk about a vehicle in Canada called the tax-free savings account. So just think of that as like a car, like we'll call it a car. And then the fuel that goes inside of that car, maybe it's a Canadian stock, maybe it's a US stock, maybe it's a bond, maybe it's an ETF, maybe it's a mutual fund. So all these different types of investment, they're fuel for a vehicle. Another vehicle is going to be your RRSP, your Registered Retirement Savings Plan. So think of these as buckets or vehicles, and different fuel can go inside. There's a lot that we have access to. I know, Kimberly, you had sent the question particular to the US VEGN, although that's a vegan ETF. Can a Canadian own that? Yes, they can. Yes, they can own that inside their TFSA. The consideration, if you do hold a US stock that pays dividends inside of your tax-free savings account, there will be a 15% withholding tax. I am not an accountant. I am not a tax professional. Speak to your tax professional. But there are some considerations to be made aware of, that what type of fuel am I putting in my vehicle? And again, I think from a foundational financial wellness piece, a lot of people should be looking at their TFSA Really, there's three tax-free vehicles in Canada right now. It's your primary residence, which is under attack. It's winning the lottery, even that gets taxed. You don't get all of what you win. And then your tax-free savings account. So I would recommend people to look into their tax-free savings account. And unfortunately, when it came out, I think it should be called a TFIA, a tax-free investment account, because a lot of Canadians, because of the big banks and the marketing power that they have over the consumers in Canada, Canadians just think that the only way to have a TFSA is to walk into your local bank and set it up at a high interest savings account where you're earning 0.02% on your money, which is not the case. You can have your tax-free savings account be an investment vehicle, and the fuel that you put inside can match your goals. So hopefully that answers your, and just to back up a little bit on because this is a big conversation, and investment management is one piece when you look at the whole circle of financial planning. There's tax, there's risk, there's estate, there's so many different pieces. Investment and investing is one piece a lot of people enjoy focusing on. I will tell everybody here, the best vegan investment is you. Over 50% of Canadians don't even have their will done, but they want to talk about being an angel investor in a vegan company. So please do build the foundation first, which will increase your confidence, which will increase your financial wellness and allow you in 2 to 3 years maybe to be that vegan angel investor that you wanted to. Don't start doing that before you have all of these risk opportunities at bay. I'm not a lawyer. I don't do wills, right? So I'm not telling you this to earn money from you to get your will done. But there's a lot of us in this room, statistically half of us, who don't have our will completed, right? And that's a living will as well. So I just wanted to put that out there because
yeah, Justin, while we're on that topic, I know that folks have lots of investment questions, but while we're on that topic, if you've got, someone here that, or I'm sure there's not just a someone, I'm sure there's many folks here who are like, they haven't done any financial planning. They haven't done anything. What's the first step? Okay. They're just like, a lot of people are like, I don't even have any money. Why would I do any financial planning? What do you say to them?
So you're going to be very hard pressed to find professionals who are going to be charging you for your first appointment. So really the first step for somebody is getting over their own fear and their own self of having those conversations. Guarantee that particular person who feels that way knows someone directly or knows someone who can have that initial conversation with them to open their mind and help them know maybe what the next steps forward should be. The worst thing that person can do is just kind of think in between their own ears, well, what's the point? I don't have anything. It's too overwhelming. I'm not going to do anything. That's the worst thing that you can do. So I think the first thing is try and find someone who is a professional, who has licenses, who has your best interests in mind, who can help guide you and educate you for 30 minutes or 60 minutes at no cost to you to try and navigate the path forward for you. I think that's the best thing that they can do. And a lot of folks do things backwards, and I understand it's similar to the way that people eat what they think is food. We've been ingrained this way. We were not taught this in school. Sorry to be a cynic, I think by design. And so a lot of people think, well, I don't have anything, because what they do is they spend everything and then they think, well, what do I have left over? Versus flipping it around and trying to, even if it's literally $10 that you need to put away every month, that you don't touch, you don't look at, and that goes to your savings or your investments immediately, then spend what you have left over. And then hopefully that approach will leave you with when you spend, you're spending guilt-free because it's your money to spend, instead of spending these things and then having that guilt afterwards that I should have done something with this first. So it's really working with someone who can help you build the mindset of probably most likely doing things in the reverse order that you're currently doing. And you don't have to have huge amounts of money to start investing. Some advisors do require minimums that are very high that you may not meet. There are a lot of advisors who don't require super high minimums. So don't be discouraged. There is a path forward for you.
Thank you. Thank you. That was a good pep talk, a good reminder to, again, for all of you to take care of yourselves and your financial wellness, because if you're not taken care of, you're not going to be able to help the animals. If we have to bring it down to that, that's the key. Okay, so we're probably, if it's okay to go a few minutes over, folks, there's a couple of other key things I want to address, and then there's some questions I want to throw at you. All right. So just to be able to give folks the lay of the land, again, we've been talking about mutual funds and stocks, and then there's companies. Would somebody, or would you split the duties of taking us from sort of low risk investment options up to the high risks, which I guess would be angel investing kind of thing. And you don't have to go in a lot of detail, but just so that we kind of understand a little bit more about what the options are. Tom, I'm seeing you nodding your head.
That's just maybe my natural reaction.
Okay, sorry. Tom's like, no, I don't want to touch that. So
no,
Tom, why don't you start with low
Sure.
risk, and then we'll
Sure.
Sloane, maybe we'll pitch
Sure.
it over to you.
Sure. Yeah, sure. Low risk would be, I think, to pick up on what Justin was saying is if you're just starting, first you need your, emergency fund. And usually, I'm not sure what the options are in Canada, but I'm sure there's probably some relatively safe, high yield, interest bearing account. Then CDs become part of that base of money that's very liquid, and really not that dumb money. It's not dumb money. Bill Gross, the founder of PIMCO, was recently interviewed as far as what's the best investment right now from his perspective. And he said a 1-year certificate of deposit. He's a billionaire. What does he know? The thing is, sometimes that doesn't mean you're going to retire by just investing in CDs and certificates of deposit, but there's for your emergency fund, for your base, your base things, that's low risk, no brainer. Don't keep it in an account that's earning 0.01%, because that's how those firms pay their employees. They literally they work on the float. There's a saying it's you make more money owning a bank than robbing one. So that's something to be aware of. Don't be lazy with your money, because the industry depends on that. So that's my low risk. Somebody wants to crank up the risk level a little bit.
Yeah.
Go ahead, Sloane.
Yeah, I mean, so the way that we run Invest Vegan has, kind of 3 main portfolio strategies, right? That are, meant for different risk levels, right? The lowest risk is the most diversified, and we only manage long-term money. That's very important, right? So like if you need money to withdraw money in, a year and a half or something like that, you're not really a good fit for investing in the stock market. That is the most crucial thing that you can understand. And if you do not understand anything else about this, that's it. Because think about it like consent, right? The stock market is not capable of giving you a predictable return over 1 year. Over 10 years, 20, 30, it is. So what you need to do is find a way to operate within the boundaries of what the stock market is able to do to get as much as you want out of it. So what we do here is, we have one flagship strategy, which is our highest risk strategy that I manage myself. It's got about 25 stocks, turns over a little bit. For a variety of, I'm selling something today because, the company really disappointed me ethically, right? So, there's a lot of stuff happening there. For folks who are not as, well suited to just, putting 100% of their portfolio in 25 stocks, I like to complement that with real estate investment trusts, which tend to be lower risk relative to equity investments and more predictable. And also, there are some ethical concerns about, making the housing market worse and so forth, and we can mitigate those. But for vegans, it tends to be a pretty compelling option, especially folks who are in retirement, because they can throw off pretty significant cash flow and dividends, and that can really cushion market volatility quite a bit. For folks who are the most, conservative, beyond that, so, you could be like, I want to just invest in equity. I want to be in this 25 stock portfolio, or I can be, I want to be in this 25 stock portfolio and some real estate. And then you can diversify even further from that, right? So you can go and say, all right, so I have a couple of these portfolios that I like. We also go out and pick funds from other providers. So folks who have complementary skills, out in the broader investment complex to produce something that's much, much, much more diversified, that owns like 1,000 stocks across a number of different strategies and like infrastructure and emerging markets and stuff like that. So think about risk in terms of the number of things that are going to produce the investment result that you are depending on, right? So, whether it's an ETF or a fund or whatever, there's a certain number of stocks in there. And if you are effectively just banking on one or two to, deliver your investment returns, that's pretty risky. And you want to make sure that you've got some pretty, skilled help in doing that sort of thing.
What's the difference between an ETF and a mutual fund?
They're both buckets that hold stocks. So the main difference, comes to tax treatment and the mechanics of trading. So from a functional standpoint, ETFs are often easier for people because they are more tax efficient. Mutual funds tend to have larger sets of choices available for folks. So that there are often more mutual funds that have actively managed strategies than ETFs, and the ETFs tend to be more index fund oriented, which is fine. They're basically just vehicles that can get you to your goal.
And Kimberly, to your
Yes,
point there,
Justin.
one of the biggest differences between the two is going to be fees. So the average mutual fund fee in the average mutual fund fee is around 2.2. You can look at fees in terms of ETFs around 0.6, 0.75, that kind of all in that. So there's it might not sound like a lot, but it does definitely add up over time. And in Canada, in terms of risk, low to high, again, taking care of yourself first is the least risky best investment. You are your best investment, period, end of story. That's where you start. So it's low risk and very important. And then moving from there, you're going to be looking at your registered accounts in Canada that you can have either tax-free growth or tax-deferred growth, so your TFSA or your RRSP. And then again, because those are vehicles, maybe like a low risk fuel that you would put inside would be like a low fee index fund or a low fee ETF. And then getting into high risk, you move outside of registered tax preferred accounts in Canada to non-registered accounts where taxes are going to be a little bit higher. Then you start getting into investing directly into a company or a stock, which of course carries a lot of risk, as a lot of folks have sort of said in the chat. So in Canada, take care of yourself, look at your registered accounts, and then start looking at unregistered accounts, which then you start getting into the world of cryptocurrencies and risk and all of that high risk, high reward stuff.
And so, so that's great. I mean, I learned something because I didn't know what the difference between an ETF and a mutual fund is. And a mutual fund is more curated. It's got experts that are known to be very good at what they do, and they're curating it, as opposed to the other one is actually just following the index. So is that right? Does that sort of summarize it?
With some asterisks, I think in general that's correct, but there are definitely EV, for instance, is not. I mean, I guess they do track an index, but they're not a traditional index fund in the sense that they when we say index fund, a lot of the time what we're not talking about the alternative meat protein index or something like that. We're talking about big, broadly diversified indices of all of the big companies that invest in that operate in the US or in Canada or something like that. So I think one of the technicalities in ETFs that I would honestly suggest ignoring as a practical matter is that a lot of them will say, we track this index, which is a very, very specific index that they've made for themselves. And, functionally, I would call that active management. Even if it's described as an index fund in the marketing materials.
Got it. Okay. Melissa is asking, I struggle with which investments should be in TFSA versus RRSP. Most of mine are in RRSP, but I will get a tax hit on the gains when I withdraw in retirement. So this is a very Canadian question, Justin. Are you able to address this at all?
Well, yeah, a registered retirement savings plan and RRSP is going to have stipulations in terms of lock-in periods, and similar to kind of like a mortgage in the sense that if you need to take the money out, there will be tax implications if you take it out early beyond that, whereas a tax-free savings account doesn't have that. So a tax-free savings account is generally looked at as a little bit more, to use Tom's language, liquid, right? You can kind of take it out and there generally won't be a tax hit. So and this is why this conversation today is not going to be a catch-all for everybody. Everybody's financial wellness is independent to themselves. Yes, there are best practices, but everybody has their own unique situation. So for somebody's situation like that, it would be worth, again, like I said, whether it's 30 minutes or 60 minutes or whomever you're working with as a complimentary introductory meeting, and having that one question be the source of your intention for that appointment, you're going to leave that appointment having a very clear idea of maybe should I be putting my money in my RSP or my TFSA. So it's really a tax implication question as well as a timeline question of when do you think that you're going to need that money, because she's right in terms of RRSPs are tax deferred. So when the money comes out, you will be taxed at your tax rate at that time, whereas tax-free savings accounts are tax-free by nature of the name, and you can take that money out tax-free essentially at any time.
Excellent. Okay, so here's a question, because Zoe is asking, is there an ethical fund that you could recommend that takes low pay-as-you-go investments for people with low amounts to invest every so often rather than dump a huge amount for the deposit? So can someone address some of the funds that are out there, like the U.S. Vegan Climate Exchange Traded Fund, and what else is sort of coming up these days that we should kind of keep our eye on? So if anybody, first of all, wants to address Zoe's question directly, that would be great. And then let's move on from that to funds in general that are vegan funds.
Yeah, so when I started, I looked for vegan portfolio managers, and Sloane wasn't around yet. I would have loved to have found Sloane, but we're going back a while. And Tom, it was really neat when I met both of them, but prior to meeting them, I scoured the globe looking for portfolio managers that were vegan. And I don't know if I'll get in trouble for saying this. One of them actually lied to me. I called them and they said, 3 of our 5 portfolio managers are vegan. And I kid you not, I'm at an investment conference and he's eating fish next to me. And I turned around and I said, with all due respect, I don't care that you're eating fish. I do care that I was lied to. Your marketing people told me that. So I found Ben Allen with Parnassus. He's an ethical vegetarian. I don't believe he's vegan, but I remember he actually mentioned it at a conference many years ago when no one was mentioning it. Like Tom said, we would go to these investment conferences and they're all change the world. They're wearing tie-dyes, like use your investments to make the world a better place. Pass the lamb, please. And it killed me. Like they're all chowing on our friends while they're talking about changing the world with their investment dollars. So that's where I would try to meet people who were doing it. Parnassus is one. Green Century, they're not perfect, but Green Century Balance Fund, they've done more advocacy, I think, than probably any other mutual fund for animals. They got Tyson's Chicken. They got them to invest in Beyond Meat before Beyond Meat went public. They approached Tyson's and said, what are you doing to counter the big alternative protein, wave that's coming? And it was right after that Tyson's started investing in Beyond Meat. They've also done work with palm oil and Carner Blue. You don't hear a lot about Carner Blue. They're small, but they set out to do something for animals. And they have one, I don't know if their vegan fund is still in existence. They had a vegan one and one that was working with animals like that were extinct. But it's like there are funds that are working on. and one recently, Janice Henderson, I've never worked with them before. I was on their call, and during their call, they mentioned animal testing and how they would stay away. And this was one particular fund away from animal testing. And I wrote to them, I said, can I put that on LinkedIn? Because nobody says that. And I feel like that hopefully will change, but the fact that it's completely non-existent, like everyone turns a blind eye to this part of it, it kills me. So I'm so glad to have everyone here because I do feel like it's changing finally.
Well, and so, in our AJ course, Claire Smith, who's the founder of Beyond Investing, does a module, and Beyond Investing is the architect of the U.S. Vegan Climate Index and sponsor of the U.S. Vegan Climate Exchange ETF. So can you tell us a little bit about that? I believe that was the first of its kind, but is that changing? Is there more stuff on the horizon? Who wants to address that?
Yeah, I can.
Thanks, Tom.
I've had the good fortune of meeting Claire in person, as well as communicating with her as fellow vegan advisor, like so many of our vegan community and stuff like this. So I'm very glad to hear that she's connected with your community, because she's quite the advocate. Is the one thing that you've noticed that, you know, the advisors here, you know, we're very hesitant, mostly for regulatory reasons. You know, if we say, you know, a certain stock or a certain ETF by name, the regulatory arm of, you know, whatever is going to come out.
You'll be taken right out of your Zoom square.
Exactly. You'll just see us sucked away. You really will. Well, what I would say is this. Yourself, if you're self-directed or work with your advisor, but I'm not sure if there's a Canadian equivalent of the S&P 500 index. US is the center of the US world, right? We're pretty big about that, but the thing is, if you're using a tool, like Yahoo Finance and whatever, you can track the performance of the S&P 500, BEGN, EATB, EATV, and you could see for yourself, and your advisor could see what the differences are in volatility and performance, and just monitor that. One of the best things that I ever did as a hobbyist when I was a scientist and didn't have any money is I monitored, and I was a serious hobbyist. I invested with monopoly money. I made a fortune in 1987 because I was all in the big dip. And, I would have been the next Jim Cramer had I had $500 million to spare, because you can learn a lot with play money, and so follow VEGN, follow EATV, follow anything else. The more that you learn, the better. And challenge your advisors to say, okay, this is intrigues me. And if they say, I'm not sure what the heck you're talking about, to Justin's point, find another advisor. If they don't know what you're talking about, that's not a good answer. So, but the thing is, I think you would find it very informative, to see for yourself these curves. When I show clients on Zoom, performance charts, they get it within like about 5 seconds, because a picture's worth 1,000 words. You don't have to go through a lot of gobbledygook, a picture, boom, there.
And so, go ahead.
Yeah, I mean, like, I would just say, I am so amazed and delighted that there are like numerous vegan portfolio managers out there for folks to choose from now. That like was not a thing not too long ago, and that rules. When I grow up, maybe I will launch an ETF. I've been hesitant to do that because it incurs a lot of fixed costs on my business. And so we try to be, we're not able to, be in Yahoo Finance yet, but, we try to be very, very transparent about what we own. And I actually just put out a letter earlier this week that shows all of the stocks we own and the rough proportion that we own them in. So, if y'all are looking for inspo, please dig in and have fun. I will say, like, it's just really amazing that we're here having this conversation, right? Because the overall ethical investment movement has already had such a huge impact that the right wing is demonizing it, which is the surest sign that it's worked. And that started because a bunch of individual investors got into ethical investing, right? It wasn't the large pension funds that started thinking about this. It was like, people who called their advisor and said, hey, I want a vegan, or I want, whatever. I want to just not own these oil companies, for heaven's sake. And the way that we do investing is pretty young, right? I think it's funny I come from a nonprofit that's sort of like an educational body that teaches people how to do investing. And, we started in like, the 1930s or whatever. But like back then, they used to call being a stock analyst a statistician, because there was no generally accepted link between accounting information and stock performance, i.e. like there was no generally accepted link between how much a company earned and how the stock would perform, right? We're at that moment with regards to sustainability, right? There's a company that just released something that is going to cause me to sell the stock, and the stock has not moved on it because the market is not there yet to see this as an existential risk. That's where we're going to get over the next 10 or 15 years, I hope. You know, but like I just think it's really cool to be part of, you know, ushering capital towards more progressive ends.
Oh, you're on mute, Kimberly. Hey-oh.
How did I
There
get
you
onto
go.
mute? I love it. So I just want to say Debbie is saying thanks for all the info. I am somewhat less confused about the concept of investing, which brings us to, there's so many things we brought up, and each one of them could be an all-day, obviously an all-day workshop. And so what are some resources, folks? What are Sloane put in an amazing resource in the chat here, and we'll share all these resources in the replay as well, around some info that her company has. Any other places where, you know, groups, online groups that are support groups, any other places that you would, you know, tell people, books that they can check out? Let's just,
Yeah.
you know, from each of you, get one thing or two things that you would recommend. So Justin, how about you?
Yeah, I got a little bit here. So I'm going to put it into the chat right now. This is the website started by Brenda. And the reason I'm putting it in here, this is more so for the other finance professionals who are vegan. I saw somebody in the chat say that they were. Somebody reached out to me before this event started and said, hey, I'm so excited this is happening. I'm also in finance. I'm also vegan. So I'm giving this resource here. You can connect with Brenda, maybe get into our community. We are abundance mindset based naturally, like a lot of us here. We're not scarcity mindset. We're not trying to keep other people out. We're trying to grow this community of vegan finance professionals. So that's there. And then just to run through the resources, 2 Facebook groups. 1, Vegan Investing Club. 2, Plant-Based Stock Investors. There's another community that's wonderful, done by a fellow named Noah. It's incredible. It's mainly focused on sort of that minimal kind of almost like $100 investment for impact investing, kind of like being your own small angel investor. And that's a community called Vegpreneur, one word, Vegpreneur. Of course, there's the well-known Veg Economist. That's great to keep your eye and ear on. Plant-based news, of course, many familiar with that. Tom and others have already mentioned cruelty-freeinvesting.org. And then in Canada, there's an amazing nonprofit here called Protein Industries of Canada, PIC. And that's an incredible organization to kind of keep your ear to and know more about. Some of them, some people might know their involvement with the government of Canada, the $100 million investment into the alternative plant-based protein space. So anyway, those are some resources that I would recommend people check out, because again, it's all about opening your mind, realizing we're not expecting other people to know everything, especially if they're not their profession, and just open themselves up to having conversations and learning along the way. That's where we're going to grow together.
Love it, Justin. Thank you. Any other resources anyone feels like they want to throw out there?
I'm going to regret this one, but I would get so many people who were asking basic investing 101 questions, and I would go through my spiel with so many people that I did videos, and Vegan Mainstream has them up, and I'm going to beg, I don't mind begging Sloane, Justin, and Tom to redo them, because I'll put the link on here, but they're awful. It's a passion project, because I really wanted to help people, but it's me doing this. And it's not my forte. So I think any of these 3 people would do a better job than me, but I'll put it up there. It's like Investing 101.
Ooh, I love it, Brenda.
I love doing
so you're
it.
saying it's low production value, but you're saying it's got the info. It's got the goods.
Production value,
it's got
but
the goods.
It was my favorite. Like I used to help military folks with investing when I was trying to start my business like 15 years ago. So I would talk to hundreds of people, and these are like my favorite slides, handouts, because a lot of the times people didn't want to think about investing in retirement, but when I would show them the time value of money, which all you guys know, as soon as they see that, they're like, oh, I need to start doing this right away. And that's what I feel like out of everything we talked about, don't put it off. I was on the flip side of this. Thanks to Sloane, I have a new compliance person. Thank you, Sloane. And I was so embarrassed about asking a question publicly, because I was like, I should know this, I should know this. And finally I emailed her and I was like, I should know this already. But I feel like a lot of people feel that way about finance. So any of us, reach out to us. We love to help people. That's why we do what we do.
Love it, Brenda. Thank you. Sloane, Tom, anything that you would like to share?
Sure. I would say a good website might be ussif.org, ussif.org. That's the U.S. Social Investment Forum. They have a lot of information about investing. Not specifically vegan, but we're kind of pushing to where this is going to be on their radar screen. It's all about making this mainstream, just like fossil-free divestment is mainstream the way it wasn't 10 years ago. I saw in the chat Investing for Dummies. There is a book called Socially Responsible Investing for Dummies. It's probably a little dated. I'm not sure if it's been updated, but I read it along with a bunch of things when I was working on my own books because I didn't want to accidentally plagiarize other folks. So I would plug my vegan investing book from 2014. I'll plug it with the caveat that it is dated. It's pre-ETF, it's pre-VEGN, it's pre-EAT-B and stuff like this. It was hoping for that day. It was pre this group. It was pre the LinkedIn and groups and stuff like that. But it has some general thoughts for folks that are consider themselves wanting to know the lay of the land of what would somebody like me write about? It's not very expensive. It's self-published on Amazon.
And sorry, Tom, it's called Vegan Investing.
Low-fee vegan investing. We'll even
Fabulous. Okay, we're going to put that. We'll find that in the link and link it.
Nice picture. Yeah.
Beautiful.
But there's for the advisors, there is the LinkedIn vegan group that Brenda started, I think, and I would connect, try ask Brenda to connect to that group to let us know you're out there and stuff like this. That's how I met Sloane recently, and so many others that are becoming part of this big party that we're having.
Amazing. And Sloane.
Yeah, I mean, speaking of parties, I just dropped my podcast in the chat.
You have a podcast, yes.
Podcast, yeah. I mean, like everyone who can't shut up. So the podcast is called Free Money. I co-host it with Ashby Monk, who happens to be Canadian, and also a professor at Stanford who focuses on long-term investing. So in that chat, I noticed a lot of questions about pension funds. Ashby is like literally, pretty close to the guy on pension funds and sovereign wealth funds on Earth, and like what they're doing to get more progressive. So we, come out with episodes every other week or so, and we go. It's not specifically vegan. Like we had somebody who is, talking about fish farming on relatively recently. I did scream at him to not eat fish, but it's just a casual conversation about various stabs at trying to make the world a more sustainable place. And yeah, I mean, in general, I could speak for myself, but I'm pretty sure I speak for everyone that like, I think we're all here as educators, right? I think like we have a big crisis of imagination in the investment profession, where if you go to the average investment professional and say, hey, can you do this for us? They're just gonna be like, oh, no. Or they're going to try and be like, well, they're going to like concern troll you or something like that. And we just need to build our own infrastructure, and we're doing that. But I think that all of us are cognizant that it's a long game, and we want to just be as available to you as possible. So if I said something that is of interest to anyone, please just reach out, book a meeting, whatever the heck. I mean, we want to be helpful to you. We want to bring, like good investing choices to you so that you can be a good steward of the community that you're in.
Amazing. And Sloane, maybe this is Justin and Sloane question, people that are not in the US, because we have, again, Canadian and other countries outside of the US, can they use the services of a US advisor?
I'm not set up to take Canadian clients yet, unless they have like a lot of money.
Yes. Okay. Got it.
In general, like, we try to take, we'll literally take a $1 deposit. Those, so it's, eventually, I know there's a lot of tax concerns that come up with that.
Yeah. So Justin, if you, do you work with like investing at all, or you work with the financial planning and then you would sort of help somebody find where they would work with their, the investment piece? How does that work?
Yeah, I don't want to promote my intention is not to necessarily promote myself. So
Mhm.
I work with a award-winning what's called robo advisor. They're a fiduciary. They focus on ESG ETFs, so low cost ESG investing, and it works very, very well for clients. And I like to network naturally. So like I like to say, if I don't know or don't have the answer, chances are I know someone who does. And so I'm just happy to connect people, like-minded folks. So if I can't be of direct service, I know somebody likely who will be able to help. And in answer, Kimberly, to your last point about books, I think, whether it's reading or audiobooks, I think that's, some of the most powerful things that we can do for ourselves as activists and just growth mindset. So 2 books that I want to give for people. One is by the author James Clear. It's called Atomic Habits.
Love that book.
Yeah. And the second one is by Darren Hardy, and it's called The Compound Effect. And the reason I recommend both of these books is because they really do start to help somebody understand Brenda's point about the time value of money, and why feeling like you don't have enough or you don't know enough and keep putting it off has a dramatic effect when you look at the numbers of being potentially 1% better every day versus 1% worse every day, and what that can do long run.
Excellent. Now, and we are going to give us a little bit of time, but we're going to compile all of these resources that were talked about today, folks, and we will put them in the module in the course, and we'll also put them in our Facebook group and with the YouTube channel. Okay, so we will do our best to compile all of these, and we went way over time. Thank you so much to our guests for giving us, for being so generous. We usually I'm not so great at cutting it off after an hour generally, but we really, like, there was just so much, right? And at one point we had 100 folks here, and that's a lot for a weekday lunch hour. So I just want to say, thank you. Let's go into back into gallery view, Kirsten. We are having lots of love that's coming through. Folks are saying so grateful and appreciative for this webinar. Really, there's Debbie said, when you said, Tom, your book is old, she says I'm old too, so that's perfect. And just some real great love coming from everybody. So take it in, and I'll also share these comments with you folks later so that you can take it in while you're not trying to talk. But Eleanor says, thank you very much. Very generous of you to share this information. And folks, I just have this tingly feeling that we just created millions more dollars in the vegan movement by this hour and a half today. I really, really, truly feel like this is going to be a game changer, because these are change makers here, and this ripples out big time. And so thank you all for being here. Thank you to Tom, to Sloane, to Brenda, and to Justin for being the connector he is and bringing us all together. Thank you for your wisdom. Thank you for just again, your generosity, and thank you AJers for all being here and really putting your time towards this really important piece that can really empower our movement in a way that we hadn't even considered. Folks, let's give an AJ welcome. Thank you to Justin and Brenda and Tom and Sloane. Thank you so much, everyone. And we'll see you in 2 weeks for our Animal Justice Academy Lunchtime Live. We're going to be talking about the future of food is female. We'll talk to you soon, folks. Have a great rest of your week. Bye-bye.